and welcome to this Moneycontrol live stream. You're watching Morning Trade with me, Nandita Khemka. Well, over the next 30 minutes, we'll be talking about the cues for trade, the earnings to watch out for, and of course, the big listing of the day, Mankind Pharma. And of course, if you have any stock-related queries, send them in to us on our live feed on YouTube, and we will have them addressed by our technical expert on the show. But before we move any further, let's take a look at the top headlines at this hour. Wall Street ends mixed ahead of the April inflation data due on Wednesday. Meanwhile, the US Fed flags concerns over credit tightening in its financial stability report. And Treasury Secretary Janet Yellen reiterates that failure to raise the debt ceiling would cause an economic catastrophe in the US. Asian markets trade mixed ahead of the release of Chinese trade data for the month of April. The SGX Nifty is indicating a lower start for the Indian market. Pidilite reports a weak fourth quarter on lower than expected consumer business volumes and headwinds in the B2B business, while Mahanagar Gas sees margin expand on the back of price hikes. And in key earnings to track today, Lupin is expected to report a good set of numbers on a low base. Watch out for the listing of Mankind Pharma, which was the biggest IPO to hit the street in a year. Grey market premium suggests a positive debut on the bourses. Well, let's get on board then. Our technical expert for today, Sacchitanand Uttekar of Tradebulls Securities, joining in this morning. Good morning, Sacchitanand. As always, good to have you on the show. Tell us, what is the outlook looking like for the Nifty in today's session, given the fact that we had an extremely strong close yesterday, knocking at that 18,300 mark. Well, even though the SGX Nifty is hinting at a negative start, but it's fairly above that 18,300 level. Do you expect that to be breached in today's session?
Good morning, Nandita, and thank you for having me on this show. Clearly, I think there are no complaints when it comes to Nifty. Since the beginning of this May series, it has been trending well above its 5-day exponential moving average. Even yesterday, we saw a very strong rally in the first half. The second half was more on a consolidative basis, but if you look at the entire trajectory on the on the trend side, there have been no signs of any exhaustion or any divergence when it comes to price action. So clearly, I think the base at 18,130 would be important. I think the 5-day exponential moving average is placed somewhere close to 18,145. So until unless the Nifty keeps on trending above this particular level, the trajectory on the higher side remains open. The levels that we have been watching out for and tracking since last week is around 18,340. I think this will be an immediate hurdle that the Nifty could face some challenges. But if you look at the options data, it is also complementing this particular fact that 18,300, the call writers have been a bit confident, but 18,500 is the next level that we are going to see once this 18,340 level has been surpassed. So right now, I think the trend still remains positive, even if we see some cool off or consolidation. I think that particular consolidation would be healthy. Keeping a stop loss somewhere close to 18,130 for the day. I think long position should be deployed. On the higher side, we are seeing a minor hurdle at around 18,340, wherein some profit booking could be evident. But eventually, we also see this particular level getting breached and probably Nifty scaling towards 18,500. So right now, I think it is better to keep your trajectory on the long side and keep trailing your stop losses higher with the trend.
I'll keep your trajectory on the long side. Before I go on to the next guest, let's also talk about the stock of the day, which is Canara Bank. NII was up over 20% on a YY basis, while profits have surged 90%, even though I think it is a little below estimates. And if you look at the GNPA ratio, that's the lowest in 30 quarters. What is your outlook on Canara Bank for today's session? Do you think it will react to the kind of earnings it has handed in?
Nandita, I think the structure has been better. In fact, we are of the opinion that 340 is the level wherein the stock could again scale back. Yesterday, we saw it slipping below its 5-day exponential moving average, but eventually, it took a good support somewhere close to around 300 levels. So I think the major trend still remains positive. After a rally of almost around 6 weeks, we are seeing some bit of consolidation to corrective. I think trend-wise, this particular swing that we have seen so far is healthy, and probably the momentum could resume once the stock again starts scaling 320, 22 kind of a level. So we're expecting a move back to 340, and I think the stop losses can be placed somewhere close to around 300 on a closing basis.
Right, Sacchitanand, hold that thought. We'll come back to you and talk about more stocks and viewer queries as well. But let's now go across to my next guest. Kunj Bansal of National Institute of Securities Markets is joining me this morning. Good morning, Kunj. Good to have you. We got you after a long time. I want to get in your thoughts on the market rally that we are witnessing right now. You know, we have quite a few factors which are working to our advantage. FIIs have made a comeback. Crude is around that $75 mark and dollar itself is weakening. Do you think that this leg of the rally is sustainable, and do you expect Nifty to test higher highs in this current year itself?
Yeah, I wish there were such simple answers to such simple questions. Unfortunately, there aren't. Nonetheless, we all are market participants. We are in the market and we have to keep analyzing the ongoing developments, and based on that, keep taking some reasonably well estimated view. So I think in terms of numbers, if we look from the recent lows of around 16,800, 900 odd, the market has risen about 7% in Nifty terms, and that's in a period of about a month or so, which is a reasonably sharp rise in a reasonably short period of time. Part of the reason, of course, as you rightly said, is that the global money has been continuously coming in, which had been missing for quite some time over the months if we look at. Now, if we change this time horizon from a month to, let's say, 2 years, then we are flat. So on a 2-year basis, Nifty hasn't done anything. Market hasn't given any return in large cap index terms. We continue to remain at the same index level of around 18,000 that we were 2 years ago. So that's the longer consolidation, which is more in picture here instead of a short-term rally that has happened. As I said, it will be difficult to take a view going forward. The result season hasn't been very supportive. The FII flows has been one positive. The one global positive that has been there is that despite continuously negative news flows coming around the crude price, that is something that has remained stable and at a reasonably decent level of in the range of $75 to $80. So I think as long as that stays, we will continue to be in a range-bound movement of the market. Individual stocks will keep having direction based on the results.
You know, Kunj, you mentioned that earnings season has, lacked excitement, to say the least. Which are the themes one should look at, given the fact that, of course, large cap IT has disappointed, even though mid cap IT painted a completely different picture, and banks have started taking the leadership once again. FMCG numbers mixed. Nestle and Marico were pretty good. So what are the themes that you'll be watching out for and one should look at, especially after this earnings season?
Yeah, so few things have clearly happened that in the last 30-40 days, market rise of 6-7%, while we indeed have seen Nifty rising, large cap indices rising, mid cap and small caps have seen at least temporarily some interest coming back. Otherwise, they had been left like orphan kids in the market, and nobody was willing to look at, even if some of them had decent financial performance. The reasons can be many. The earlier valuations itself had reached very high level. All the sectors had been seeing commodity price rise pressure resulting into the margins erosion, and of course the interest rate impact in those companies wherein there is a reasonable amount of debt. So all that picture now seems to be falling in place. We have seen that RBI paused interest rates. So while it has not started to correct, it won't in the near future. But at least now it's likely that the interest rates won't, the interest cost for the companies won't go up any further. Commodities, yes, we have been continuing to see. In fact, metals, we have been seeing correction on and off. But on a reasonably 8-10 months, 12 months basis, they are sitting at a 15 to 20% correction. All the metals, commodities, ferrous, nickel, zinc, etc. So I think going forward, we should probably continue to see this interest in the mid-cap space. In terms of the themes, we will have to go by the results. So if we look at the result season, unfortunately, it hasn't been as great, part of which was expected, part of which has been lower than the expectation. But coming back, so banking has been one sector which has given the reasonably decent number despite the pressures of interest rates rising and the prevalent seemingly slowdown which is there in the economy. The other sector which has continued to give good numbers is the capital goods. So that's a space across which has shown increased order book, of course shown increased revenues, increased margins as well, partly by the commodity price correction, partly because of the leverage benefit that has happened. Of course, the stocks have also been rising in line with that. So the valuation hasn't remained corrected. But coming back, if I were to choose a combination of good financials and reasonably decent valuation, banking selectively will continue to be there as an investment opportunity space.
Right. Continue to look at banks as an investment opportunity space. What about the auto basket? Tata Motors has started, participating in the rally. The stock is up above that 500 rupee mark. Earnings are slated to come out this week. Do you think this is one stock that is emerging as the top pick among the auto stocks now?
Yeah, so banking and capital goods are the two stocks sectors I talked of. The other sector that has been showing reasonably decent number, at least on a selective basis, if not the sector as a whole, has been the auto, and that has pulled auto ancillaries also together with it. Some of the auto ancillary numbers have also come out very well. So whatever numbers have come out very well are showing. Of course, the auto is one sector wherein the monthly volume numbers are always available to us. So to that extent, the results do not have any surprise on the top line numbers. Sometimes there is a surprise on the margin numbers or the EBITDA numbers. So that is something that we will have to watch out for. Going by the results that have come till now, looks like the margin improvement trajectory will continue in the sector as a whole, and both in the automobile as well as auto ancillaries, we will continue to see decent numbers. And given the way the stocks had corrected over the last 9-10 months, some of them have recovered, some of them still haven't recovered. So we still see investment opportunity for the medium-term investors being available in the auto. And to answer your question, yes, as a result, the view is reasonably positive on the auto as well as on auto ancillaries.
Right. Kunj, my last question to you, I wanted to get in your perspective on Bajaj Finance. This stock underperformed Nifty for the first time in 14 years last year. And, it is available at a pretty expensive valuations when it comes to the other NBFCs. What are your thoughts on this stock? Do you think it's time to steer clear of this, or does it make a case to invest in this stock?
So for coming to the stock view, we obviously have to look at the broader picture of the sector or subsector. Now, the whole NBFC space is a part of the larger BFSI space. Within BFSI, we had talked of banking, but we haven't talked of NBFCs, which have started to show reasonably decent numbers. In fact, not only NBFCs, some of the microfinance companies, the whole sector had kind of become, had gone out of radar of investors over the last 4 or 5 quarters, led by multiple things, led by the interest cost hikes, led by the increased asset quality issues, the NPA numbers. All those now looks like have started to fall in place. So even the microfinance companies have started to show good numbers, and as I was saying, NBFCs also. So what happens is every sector and every stock has a kind of a life cycle, just like a lot of products have life cycle and things like that. So we indeed see when there is a huge amount of growth rate continuously being reported by one particular sector or a company, market continuing to reward that sector or that stock. At some point of time, that high growth phase turns into mature phase wherein the growth rate starts to come down. One, because the base has gone up. Two, because the particular operator has taken a reasonably decent market size. And three, looking at the opportunity, the other players also start to come in and start taking market share. So I think all these things are happening, and as a result, they are putting the valuations in place for the stocks which were overvalued, and again in place in terms of rewarding for the stocks which were undervalued as well.
Right, Kunj. Well, with that, I think we are running out of time. So thanks a lot for taking out time and sharing your perspective with us. Appreciate having this chat with you. Well, let's go back to Sacchitanand and take a look at some of the queries that are trickling in this morning. The first one is coming in from Iqbal Singh, and he wants to know your thoughts on Britannia. Now, the numbers were good, but yesterday we saw some bit of profit booking come in on the counter. How would you advise investors to look at this stock now, somewhere around 4,600 levels, moving towards its 52-week highs? Case to buy?
Nidha, the trend remains very strong. In fact, despite of the fact that we have already seen a strong rally from 4,300 base, even if it cools off, I think it will be a good opportunity. On the weekly scale, monthly scale, we have a rounding bottom kind of formation. If you look at the weekly RSI, there is no sign of any divergence. The weekly RSI is comfortably placed around 63. So I think there's a good scope for this particular trend to continue on the higher side. Even if he seals the pullback I think 4,500 support should hold on to that particular pullback, and probably it will be a good level wherein he can add on to his long positions. We're expecting a move towards 48.40 on an immediate basis. And if you look at the longer time frames, the structure is well placed for a positional move towards 5,200.
Sure. So that's the call on Britannia. Let's take up a query on Borosil then. That's coming on our feed. Stock has done well over the last 1 month. In fact, even on a YTD basis, it's up somewhere around 11% or thereabouts. Moving towards 462, that's its 52-week highs. Should one hold on to this one, or if one has positions, is it time to book profits?
Nanita, we are talking about Godrej Industries, right?
No, we're talking about Borosil.
Borosil. Okay.
Right.
So I think Borosil, I think immediate basis, I think the price action is looking better. It is trending well above its 200-day exponential moving average. I think the concern is the consistency in volumes. So in case if we see a breakout above this level of around 530, and then probably we may see an extended move towards 600. But as of now, I think if someone is holding on to this particular position, then the stop loss should be placed at around 490 on a weekly closing basis.
Right, I want to take up the next query on MANApuram. This one is coming in from Alexander, and he wants to know if it's the right time to accumulate MANApuram at the current level, or is it time to wait for a dip and then go in for this stock. Over the last 3 sessions, we've seen the stock lose 20%. Then yesterday it gained somewhere around 5%. Of course, all on the back of news flow. Do you expect, would you suggest that investors look at this counter if there is more downside on the charts?
Well, immediately, I think the trend has been weak, but we don't see it, falling below 90 kind of a zone. I think even last time we saw a good amount of support getting built there. So if you look at the data from 2016, there have been multiple times when this particular support zone has been respected well. Somewhere close to 96, 90, I think that will be an ideal level wherein the stock can be looked from a portfolio perspective. There are no major changes in trend right now. We have already seen a big corrective phase getting over somewhere in the month of July last year. And post that, the higher top higher bottom sequence has been holding all well. So I think in case if we see a decline towards 196 levels, I think that will be a good level where the stock can be accumulated from a portfolio perspective.
Right, so that's the view on MANApuram. Let's take up a query on Craftsman Automation. This one is coming in from Debuke, and he holds these shares at the rate of 3,275 rupees a piece. If you look at the counter, it's trading at somewhere around 3,160. It was down 4% yesterday, and Debu is making a loss on it. What would you advise him to do at this juncture?
Well, certainly it's not a trading stock. If you look at yesterday's price action, we have a sign of a engulfing bearish formation. The resistance at 3,300 looks quite prominent. And on the lower side, we may see slippages towards its 200-day exponential moving average, which is placed around 3,000 levels. So I think as of now, in case if it is a trading position, then probably you can maintain a stop loss at 3,010 on a weekly closing basis. In case if this particular level is breached on a consistent basis, I would recommend an exit.
Right. I hope this answers your query, Debu. The next query is coming in from Rupak Mehta, and he wants to know your short and long-term perspective on Delta Corp. This stock over the last 5 sessions has, gained somewhere around 2.5%, but it is moving towards 250 levels or thereabouts. How is the chart looking for this one, Delta Corp now, Sacchitanand?
Well, the structure is improving. In fact, after almost 5 months of consolidation corrective, we have seen some bouts of reversals here. On the weekly scale, monthly scale, both the chart structures are looking very confident. On an immediate basis, I think the base at around 200 should hold on for this particular expiry. Even if you look at the options data, it is clearly indicating that put writers are very confident at that particular level. And on the higher side, we may see, the trend getting continued towards 225, 230 kind of a zone. So from a short-term perspective, I think any consolidation or corrective towards 200 should be bought in. and the positions can be reviewed somewhere close to around 230. But from a long-term perspective, there are chances that in a year or so, this particular stock may again pull itself towards 280 zone. So right now, I think the way it has formed a base at around 180, probably that particular base on a long-term structure may not be violated. And with the market, I think this stock will get stronger, and probably a good review zone would be somewhere close to around 230.
Right, so that's the view on Delta Corp. Let's take up a query on Umura Realty. This one is coming in from Rahul Singh, and he wants to know your thoughts on this counter. Over the, on a YTD basis, it's up somewhere around 7% or so. And in the last month also, it's been pretty okay, up over 3% or thereabouts. The kind of rally that we've seen that has come in on the realty pack after the RBI policy, do you think this is going to continue and it's time to buy these counters on dips?
I think from the pack, DLF still remains the best placed stock, and even there we are still expecting upside open for almost around 20-22%. When it comes to Oberoi, I think the stock is lagging back right now, but the structure is not that weak. The support at around 850 should hold on for next few months, but it needs a strong breakout above that 1050 mark. So once that particular level is breached, probably we may see a very quick rally towards 1150-1200 zone. So the immediate level or the hurdle is placed somewhere close to around 1000 levels, and probably that could be a short-term target on the higher side. In case if someone is holding on to their existing long positions, then the trailing stop loss should be placed at around 900.
Right, we have a query coming in on Adani Power from Bharat Kohli, and he wants to know your thoughts on this counter. Of course, it has halved from its 52-week highs, and since January, we've seen the Adani group of shares, of course, being under massive pressure and then making a comeback as well. So right now, how would you advise investors to look at Adani Power among the other Adani stocks?
Just follow the trend. I think the trend is still, finding its strength. As of now, on the short-term basis, it has managed to form a higher base at around 190, so which is a good sign. In case if the stock displays a pullback towards 225, I think that will also be a good level to accumulate. So probably, we can just follow the trend. And right now, I think the trailing stop loss should be placed somewhere close to around 202 on a weekly closing basis. And on the higher side, there's no major hurdle, before the level of around 280. So I think this particular momentum could continue once it starts, trending above its 200-day exponential moving average, which is placed very close to the current price action, which is around 240.
Right. One last query for today. This one is on Bharat Forge, coming in from Alex. Stock is down 12% on a YTD basis, but view on defense stocks seems to be pretty upbeat. So how should one play this one now, Bharat Forge?
It's better to have a level-based trade. On the higher side, 800 hurdle is very evident. We have the 200-day exponential moving average also placed there. The options data is also indicating that 800 hurdle could be very important unless the stock doesn't break above this particular level. Do not expect any momentum to unfold. And on the lower side, 740, 760 looks like a decent, base. So probably we may not see any major weakness below this particular level. So immediate basis, in case if it, turns lower towards 760, I think it will be again a good opportunity for a mean reversion trade. But the major part of momentum will only unfold once the stock starts trending comfortably above 805.
Right. Well, this wraps up our query segment for today. But before I let you go, Sacchitanand, share your stock recommendations for viewers this morning.
So there are two stocks, both on the long side. First one is Vedanta. If you look at the weekly structure for the last 6 weeks, it has managed to form a very good base somewhere close to around 270 to 75 kind of a zone. Yesterday, we saw a very strong price action there. If you look at the data, it purely exhibits short covering. But if you look at the daily structure, we have signs of a broadening formation. The base of the broadening formation is also placed somewhere close to around 275. So we are recommending long positions here. We're expecting that this particular rally could unfold into a bigger price action. We're expecting a positional target of around 295. The stop loss from a trading perspective should be placed at around 274.30. The second stock which has been on our radar is Bajaj Finance. We have already seen a good consolidation breakout in yesterday's session. The 1400 call writers are now looking on the back foot, and probably this particular momentum could get continued towards 1450 level, where its 200-day exponential moving average is placed. From a position perspective, we are expecting a rally towards 1495. So from a trading and positional perspective, we are advising long positions here. The trading stop loss should be placed at around 1833 from here.
Well, those are the two stock recommendations coming in from Sacchitanand. With that, Sacchitanand, thanks a lot for taking out time and joining us this morning and addressing all the viewer queries as well. But before I let you go, before I say goodbye to you guys, keep a watch on Mankind Pharma that will be making its debut at 10 p.m. today. Remember, it is the largest pharma IPO after Gland Pharma, which raised somewhere around 6,480 crores in 2020. The price band was somewhere around 1,024 to 1,080 rupees a piece, and it is expected to have a positive debut. That's according to the grey market premium. So watch out for that at 10 a.m. Well, with that, it's a wrap on this edition of Morning Trade. We're completely timed out on this edition. So from me and the entire team, thanks a lot for watching. But don't go anywhere, because coming up next is Opening Bell.